Okay, welcome back. Grab some coffee. We're going to have a nice little monologue with just me, myself, and I. And I'm just going to talk about what has transpired so far this month, what options I have that are expiring this week, and we're going to also talk about rolling back an option. Because possibly when you're selling puts for some income on the side, you may not want to own the shares outright. If you are under the risk of getting assigned, you might say, well, actually, I wouldn't mind, keeping this option, but just having the expiration date a little farther out and just seeing what happens. Maybe you feel bullish, maybe not so much in the short term, like in the next couple weeks, but maybe in the next month or two, you can see the stock going back up. You're no longer possibly going to be assigned. What can you do in that situation? How do you do that with a put that you already have sold? So we can talk about that. Might be new to some of you, and it might potentially be something that I'm going to utilize this week. We'll see. Just to recap, in case you haven't been watching every video, I've only made one video last week because really nothing has been going on this month. I've just been holding shares. And I don't even want to sell calls at this point because, everything's gloomy and I'm not going to make much premium selling calls. So I'm just holding on the shares, just seeing what the price action is going to do for some of these stocks in the future. And then if we see them going up, I'm going to be looking to sell some calls. But yeah, so far, this month in December, nothing has really been going on. The biggest event was me losing $174 trying out put credit spreads, which, especially in this market that we're in right now, is how volatile it is. Definitely not something I recommend. Not that I recommend stuff on this channel anyways. It's just for you to watch my journey. But I definitely wouldn't recommend that in a volatile market unless, you enjoy risk, which that definitely was, at least in my eyes. But so far this month, I've only made $18. And if we look compared to last month of $21.30, that's nothing. So nothing exciting. I made a lot of videos last month just because I was making a lot of trades, but now I feel like I don't have as much to talk about, and that's why I only made one video last week. But something cool coming up in January. Some of you may know I'm a big holder of Astra right now. Astra's first satellite launch to be conducted for NASA. That's interesting. From Cape Canaveral's, whatever this site is, but this is going to happen in January. So they are going to launch a satellite into space. And supposedly from this article, there's not a whole lot in here, but it's going to be live streamed. So I wouldn't mind tuning into that and seeing how this goes. That's some pretty big news that they're launching a satellite for NASA. And also quickly in the news, I saw this today on Yahoo Finance. I browse Yahoo Finance from time to time. If I find something interesting, I do like to share it on this channel. But JP Morgan sent out a letter to their clients where JP Morgan Chase's global research leader Marko Klanovic says, our view is that 2022 will be the year of a full recovery and an end of the pandemic and a return to normal economic and market conditions, which I think all of us would be very, very ecstatic if that were to happen, right? Everyone would be happy, I would think. But let's talk about what I'm doing, what kind of options I have that are expiring this Friday, and we can also talk about rolling back an option. So the latest trade that I make was I sold a put on AMC. It dipped pretty low on Friday, so I was actually getting pretty good premium on a $20 put that expired next Friday. And how much did I make entirely from this? I made $48 from selling this put. It's already worth 22 less, so I gained 22 if I were to buy to close at this price point. And this could be something that I just close early. I could close it tomorrow. I'd be fine with making 50% at this point and then freeing up that $2,000 of collateral. That's one of them. I have another $20 call on Astra that also expires on Friday. I don't expect this to get assigned because Astra's sitting at $8.91, and for it to go up 100% next week, highly unlikely. So this is just going to expire in my favor. I'm going to keep the shares and just keep the $65 credit from selling that call. And next we have some Astra puts. So if Astra doesn't break $10 by Friday, I might be the proud owner of 200 more shares of Astra, which actually, I'm kind of okay with. I made This is a little confusing because I'm also trading put credit spreads on Astra, so these numbers aren't exactly correct, which those put credit spreads aren't doing well because they're also hoping that Astra gets above $10 on Friday. But that's a different story for a different day. Let's talk about what if I don't want to really be assigned the shares, even though that's kind of what I talk about, is I always sell puts on a stock that I wouldn't mind owning those shares at that price point, the strike. Let's talk about what if we still don't want to? What if we kind of change our mind? We're like, well, sure, I could own the shares, but really, I'd rather just hold on to the put and see what happens in the future. Maybe I would just like it to have a farther out expiration date. So Chemocentrics, I had sold a put on this a while, and we've at some points, I would say I was like 70% positive, and then this hasn't been doing too hot in the last week, so I'm only up $7 after having sold this put for probably a month. So time decay was really on my side, and then all of a sudden we're basically back to where we started after a month. So what if I'm like, well, yeah, I could own 100 shares of this at $35 a share, but what if I'd rather just extend this expiration, maybe make a little money while also doing that, and just waiting and seeing what happens in the next month or so. So what I can do is let's view options here on Robinhood, and let's go find the put that I sold, which is this with the -1. This $35 strike expires on the 17th here. And what I can do is I can buy to close this. So this is going to cost me $203. And if you remember the last screen, this means that I would have made $7 total from this whole trade. And the positive thing about this, if I were to only do this, is it would free up my collateral, and I'd gain $7, and then I can maybe make trades in the future. But maybe we want to roll out that expiration. Let's say the next expiration, which is January 21st, and we still like the strike price. So let's sell a put, $35 strike for January 21st, and we'll do that. So we're rolling it out almost another month. We're using the same amount of collateral, $3,500. It's still going to be, set aside in case those shares get assigned, but we're just extending the expiration of this. And because I'm doing this, I'm actually going to make another $242 in premium for doing this. And then if we go ahead and hit continue and make this trade, if all of a sudden Chemocentrics starts shooting up and it gets closer to 40, this particular put that we sold might be more worthless than what we bought it at, if that makes sense. Or here's something else we can do. We can say, well, yeah, I could own 100 shares at $35 this Friday if they get assigned, but maybe I also wouldn't mind owning 100 shares at $33 come January 21st. So let's just sell this one instead. So the strike price is going to be $2 lower. So we're going to get 100 shares if it does get assigned at $2 less. And we're also going to make some money, not as much as if we were to keep with the same strike price that we had before, but we're going to make $132 by doing this, and it's going to use less collateral. So technically, we have $3,500 locked up right now for my current put that I sold. We're going to buy that back to close it, and then we're also going to sell one out in the future, but it's going to use less collateral. This is only going to use $3,300, so we should get $200 released. Now, don't get that confused with you made $200. That's just the $200 you had before, but it's just being released to you. And you have the potential possibility of lowering the strike price as well, or you can just keep the strike price that you were okay with before. So I thought I would talk about that because I might end up doing something like this, maybe even with Chemocentrics. Who knows? This week, depending on what the price action for this does. Maybe it'll go up past 35 by Friday, and then I won't even have to worry about this. But I thought I would share it with you because it is an option if you are also selling puts on the side for some extra income that you may not have been aware of. So that'll probably conclude this video. If you enjoyed, feel free to subscribe. That way you can follow along with me selling puts on the side, hopefully making more than $18 in December in premium, but who knows? We'll see by the end of the month how much I actually make or lose. That's also a possibility. And hope to see you all in the next video. And as always, take care.